All right, what's up, guys? So I was in my charts tonight. As you can see, it's super early in the morning, but I got to digging around in the charts, and we're looking at NQ tonight, and I started seeing a pattern. So I'm going to show you this pattern, share it with you real quick, and I'll let you decide what you do with it. But this is very intriguing, and if you subscribe to anything that ICT has talked about the past 8 years, 9 years, uh, we're talking about algorithmic price action. So, of course, with that is going to come standard deviations, and you can use standard deviations. This is no secret on price swings to kind of project where you think price is going to go. I'm not doing that right here. Well, kinda am. So what I want to show you is what I've been looking at here for the past time. And I'm looking at where price reflects off of some kind of PD array, where there's a stop hunt, things like that, before price makes a move like this swing here. So what I'm looking at here is price came down, made this low, and came off the low, but then it came back and ran that previous low out. Now, I've been going through the charts and I've been dropping a standard deviation on these wicks and measuring them out and seeing where the following wick that grabs the low away from this one falls. And if you see here, this one falls just short of, or just outside of, the 3 standard deviation from the distance from this tail to this tail. And it's one tick out. Okay. The one we measured from is then not traded below. It's traded below by 1 tick here, where we have a low of 28.75, a low of 29. So 1 tick below this low again. Okay, so granted we're in the Asian session, but we'll continue. Here we have it again, this one. Now, what I'm seeing is if you measure next to the candle, either side, you get a projection. Here we hit the 6 standard deviation on the following candle, and it got up to consequent encroachment of this one. So you measure that, got 6. Here we made a low. We consolidated a little bit, made a low, came off of it, ran that low out, because that low took this liquidity over here. And you're like, okay, so what if it wants to go higher? It ran the 4.5 standard deviation, which is consequent encroachment or mean threshold of this block of down close candles here, this bullish order block. Okay, coincidence, right? Here we have lows 1, 2, 3, and you're like, it's probably done. Is it? Once again, 2.5 to 3 standard deviation, and price makes a move, and we've got 13 handle move, which 10 handles is good. That's $200. Same here. Look at this one. Made a high, subsequent low, lower high, relative equal highs. Price came off of that, consolidated, came back up to second standard deviation of this high from here to here. 2 standard deviation is what it hit. Same here. Made a low, a high, came off of that high, reopened, went back up, swept that high to 3rd standard deviation between these 2 candles. Now, this example here, you're like, okay, well, consequent encroachment of this fair value gap is that it didn't hit it. Went to the 3rd standard deviation of the difference between these 2 wicks. Like, I don't know. I don't know what to tell you. Like, I'm not making this up. I literally noticed this one, just being curious, found this one, and then I've been going back through, and like, I'm not lying, we're on a mission of discovery together at this point, right? Because I'm figuring this out as we go. This one, right, came off a low, came off a high, I'm sorry, did not sweep this low, right? We didn't come to any significant price point on the left hand side of the curve, right? Price comes off of it, rebalances this fair value gap, and drops back down. Now this is right before, this is 5-minute chart, of course, this is right before London, and we see a run on liquidity here. Still didn't take this low, but we did here, run that low out, but how far below it? 4.5 standard deviation between these 2 candles. Like, I'm telling you, we're figuring this out together. This one. Now, made a high, right, in a wick. Came back up into this one beyond consequent encroachment. Consequent encroachment of this wick. Measure that. 6 standard deviation right there. Wow, hit it. Like, and this was that funky candle we got after the close on Tuesday of this week. Like a random level, right? It swept this liquidity, got into this fair value gap here. Consequent encroachment of this fair value gap is 6.5 standard deviation between the high of this candle and the high of this candle, the high of this swing before it did that. Let's find out about this low over here. I didn't even check that one. So we've got this low here to our little standard deviation, just shy of the 2nd standard deviation. So what if we do the subsequent candle? And so what I'm seeing is it's really between either candle. Whenever you take your measurement, it's really, it could be either one. I'm just like literally figuring this out, like I'm finding this right now. But look what's over here. Like, it's like reaching down into a fair value gap, order block, but it's the standard deviation of the distance between these 2 candles. Again, here we have a high made here, reaches up into that wick, comes off of it, goes back up to 3rd standard deviation here. So whenever I do a projection of a swing and I put my standard deviation on it, I always take this distance, measure it with a box, and drop it down below, because it's really this area I'm interested in. The 2, 2.5 to 3. The 2 to 3 deviation, standard deviation, is an area I look for. 4, 4.5, 6, 8. Like, it's really this area as well. So, and I found other cases like, so this this swing low here, got into this order block, right? But if we were to measure this, what, it'd be like 1 standard deviation below the difference between these, just about. But let's continue on to the other stuff I found. This one, same thing. All right, we have a busy here, and I've graded that busy here. We got consequent encroachment. Got down into it, right? Tapped into the fair value gap, dipped down into it again, left, expanded away, and then retraced back into it. But how far did it go down into it? 2.5 standard deviation between the distance between these two wicks, which happens to be 3/8 of the way in. So it didn't make it a consequent encroachment, but it's halfway between these two marks. What about this? Here we have a low, short-term low, came off of that low, went into this gap. Now this is right before open, right? This is 8:30 news day, or would be if it was any news, but it's 8:30 before the New York session. Came down, ran out this low here to 3 standard deviations, so 1 box below the 2.5. Didn't come back to it. Like, this is like a confirmation tool almost, because you see this low came back down to this low. This one made a little short-term high, came off of it, ran out that high to 6 standard deviation. Again, this one's pretty far off, but still, you see what I'm getting at here. Fair value gap, fell short of it, measure that, 8.5 standard deviation box, hit it right there, boom. This one doesn't fall into a significant graded area of this fair value gap, just a standard deviation of this distance. Like, there's nothing like that high over here, but this one was crazy. All right, so over here we made this low, right? Market opened up Sunday night, came down, made this low, came off of it, consolidated, and then started falling off, fell off to 4.5 standard deviation, like to the tick. Pop, like, pick a box, draw it over, hit it. But like, what significant point over here was it going to? Because you look over here, there's nothing really there for it to be like, okay, I'm gonna stop here, like a consequent encroachment or mean threshold of a block or anything like that. Like, there's nothing there here as well. So we have a low, and then we have some consolidation, and we do measurement off this box here because we got into this wick. 2 standard deviation right between the 2.5, and then it makes it move. Now, if you see this happening, it's like it's going to make a move afterwards. In every case, like, came down to it, made its move, came down to it, made its move, came up to it, made its move, came down to it, made its move. Like, every time you see something like this, it's like it's right before it's making its move. Yeah, and if I was to maybe do this one, like, this one doesn't look like it would be, you know, very far off. But let's say we have this high, it ran that high out, but how far above that high is it going to go? So our short-term high in between, we have 2 candles, 2 wicks on either side that are the same length. 2.5, right? Like, I don't know what to tell y'all. Like, I'm not making this shit up. I literally just found it. Same thing here. We've got from this wick to this wick, 4.5 hits it on a high in morning session, New York last week. Another one of these long-term things. So made a low, came down into the wick at that low, 2.5 standard deviation, drew a box on the bottom of it. Price came over right before its big move on the news, hit it to the tick, 2.5 standard deviation, 3 standard deviation below this wick. But like, I mean, it's an equal, relatively equal to this here. But could you, like, I don't know, you know, maybe all of this is circumstantial. Maybe it's just happenstance. You know, it's just bananas on how many times, like, and I'm just like going through it like, okay, let's see what this one looks like. Right next to each other, right? Made a high, came off of it, 8.5 standard deviation, hit it right before the big news drive. Big news drive hit. We took a value of this swing here because this is kind of like a manipulation leg before we get into the news right here. 6.5 standard deviation. I mean, it's, you can go through your charts and check. Oh, there was another one here. Let's check this one out. Get rid of that. As you see, like, made a low, came off of it, came back down, made another low. It's equal to this one, but in between the 2.5 standard deviation from this low. You know, it's just wild how this is playing out. But I went back. There's another one here. So made a high, came off of it. This is before our run. This is in overnight, no, in the morning session actually. So let's get rid of that. And let's see, which one was it? From here to here. 2.5 to the 4. Oh, let's do this. Put a box on it. See if that falls in the range. I mean, you could call it if you wanted it. But that's just off the measurement from here to here. I mean, if we were to try another one, 4.5 right there. I mean, and that's not even this, that's a yep, that's equal high there. So take that swing project, that wick projection. This is wild. I'm like, I was tripping off of this for a long time before I decided to even make a video about it. Like, this is completely nuts. Again, let's measure this one. We're on a mission of discovery together, guys. 2.5. This guy right here. Two standard deviation on the low before the move. Again, subsequent low, subsequent low, subsequent low, subsequent low. Like, okay, are we done? Right? 2 standard deviation, and then it doesn't come back. Here again on a swing high, 2 standard deviation, doesn't come back. Well, I mean it does, but after this move here, is you should probably go through your charts and do the same. Here we go again, right? Consolidation area, swing low, subsequent wick, and like, what you want me to say? What time was that? 2 o'clock in the afternoon, 2:40. There's another one here. I mean, it's all over the place. Again, right? You're like, is this going to be the swing low? Or are we going higher from there? Well, let's see. This is probably going to be like halfway on this box. And then it makes this move. So why did it go down there? Right? Like, okay, so why? That's my question I'm always asking is why? Why is price doing this? Why is it going here? I don't see any substantial evidence as to why it would stop there. Nothing in this area really catches my eye that would be like, okay, yeah, I see. That's why I would go there. I mean, we could do like an inferred fair value gap check on it and see if that would be something like, so we have there, and then let's draw another one here. I mean, it dips down below consequent encroachment of the inferred fair value gap, but like, all I'm saying is you see what I just showed, so you can go back and look for yourself. Here's another one. Right? Low, come off of it, made another low. And then our final low is right on our 8 standard deviation. So came down, so this one is right at our 4, but then this guy comes right down to the 8. So if you're wondering about your lows, like, you know, you could use this as a confirmation tool maybe. Like, I don't know. You probably need to back test the shit out of it to see if this is something that you might be looking to implement into your own trading system. But I am surely going to be spending more time looking into this, because this is just like, I don't know what to tell y'all. Like, I don't know. It is what it is. This is the reflection of the ghost. Y'all, give me a like, give me a share, go to my Twitter. Like, we're in this together. Help each other out, uplift each other. I wish y'all the best. Happy trading, and I'll see y'all next time.